We got some big news for Rivian stock investors as the company reported third quarter production and delivery numbers that disappointed shareholders. The stock price was down as much as 8% following this announcement. I'm going to review the details of these numbers and what it could mean for Rivian stock investors. The company downgraded their annual production guidance, and could this mean that gross profit margin for the fourth quarter positive that has been a long-running goal for Rivian is now off the table? I'll answer those questions here in this video. Let's get into it.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, Rivian saying that the company produced 13,157 vehicles and delivered 10,018 vehicles during the same period. Now that's 3,000 more vehicles produced than delivered. However, I don't think the inventory is going to be an issue because of what the company said next. Rivian is experiencing a production disruption due to a shortage of a component for the R1 and RCV platforms. The supply shortage began in Q3 of this year and has become more acute in recent weeks and continues. As a result of that shortage, Rivian is lowering its guidance to 48,000 vehicles at the midpoint. Remember, this is down from 57,000 it initially thought it would produce this year. The company is also reaffirming its delivery outlook of low single-digit growth compared to last year, which it expects to be roughly 51,000 units in 2024. Remember, Rivian has undergone many changes here in 2024, trying to lower the costs of production, and this is an outcome of those changes. You find it more challenging to do these changes and issues arise, especially when you're a smaller manufacturer like Rivian. You don't get priority treatment from suppliers. Suppliers would prefer to give priority treatment to the larger car companies, and Rivian gets placed at the back of the line when it needs materials. Now, I've said its deal with VW will help Rivian rise up the totem pole and get more respect from suppliers and get more priority treatment. But as of now, the troubles continue for Rivian. Now, when you compare with the same time last year, the company produced 16,304 vehicles and delivered 15,564. So year over year, the delivery number falls from 15,564 to 10,018, a roughly 33% decrease in year-over-year deliveries for Rivian. Unsurprisingly, the stock price is down on this news, falling from around $11 a share down to $10 per share as of this recording around 12 o'clock Eastern Time on October 4th. Now, if you look back longer term, over the last 5 years, Rivian's stock price is down incredibly from close to $200 per share down to $9.94 per share. Of course, I've been following Rivian stock for several years now, and throughout this entire process, I've been telling investors to avoid Rivian stock. In fact, I've been telling investors to avoid nearly every stock in the electric vehicle industry, as the estimates and forecasts for EV sales were way overblown. I mean, way overblown. The reality in 2024 is that less than 1 out of 10 consumers in the US is choosing an electric vehicle when they go out to buy one. And the industry forecast was for much larger percentages of EV sales. Now these EVs are sitting in dealership lots, and dealerships are complaining that car companies are sending them too many electric vehicles that consumers do not want. These companies are offering promotions and incentives along with thousands of dollars of government stimulus to try and sell these vehicles, and still consumers are buying less than 1 out of 10 vehicles are electric vehicles. So what could this mean for Rivian stock investors? Well, for one, we have to look at last year, the September quarter, which ended September 30th, 2023, when the company delivered 15,564 units. It still lost $1.44 billion in operations when it delivered 15,500. Now, with the current quarter delivering only 10,000 units, this loss from operations is likely to be larger. Now, the company has made some improvements on the cost of goods sold, but it's also selling these vehicles at lower average selling prices after Rivian joined the price cutting pressure campaign that was started in late 2022. Additionally, the company's net cash flow from operations in the same quarter last year was negative 877 million. It's likely to be much larger when the company reports the actual profit, loss, and cash flow numbers later this year. So, all in all, Rivian disappointing investors here with their quarterly production and delivery numbers, which is rare for the company. Rivian, in terms of execution, has done a great job in dealing with the difficult situation it finds itself in. But this one was the first executional difficulty for Rivian in the years that I've been following the company. The primary reason why I've not wanted to rate Rivian stock as a buy is because of the industry it operates in, not because of the company specific factors. Company specific factors have actually been pretty good. Management has made several good decisions. Execution has been better. The company works on whatever it can work on to improve operations. It's just in a bad industry. The timing, the entry into this industry, that's what makes it a poor investment, not because of what the company is doing specifically. With these lower numbers, now investors turn to the guidance that will come from management on November 7th, when they will likely discuss the goal of becoming gross profit margin positive in the fourth quarter of this year. I wouldn't say that's completely off the table. The company can still achieve that target. There's discretion at management's disposal. There's things that they can do to achieve gross profit margin positive, even if delivery, production, and demand is not as strong as they would like it to be. For instance, if you want to increase profitability, gross profit, you can increase spending on advertising, which comes below the gross profit margin line item. The increase in advertising will increase demand. It might make your gross profit margin positive, but overall company profitability will still be negative. So you can play with where you spend your money to deliver gross profit margin positive and still generate losses on the bottom line. That's why I say management has discretion and they can play with those numbers. They can play with their budgets to kind of still hit that target of being gross profit margin positive by the end of Q4 to fulfill a promise they made to investors. It's critical for management to fulfill promises they make to investors. Otherwise, investors lose trust in the company. And when the company goes back to investors to borrow more money or ask for more money, investors would be less willing to give them money. And Rivian is going to need more money. They've already gone through $25.5 billion. That's how much has been lost in operations for Rivian Automotive. Its retained earnings have now soared to $21.5 billion. That will be even higher when the company reports its quarterly numbers on November 7th. Rivian at one point had close to $20 billion in cash and cash equivalents, and that's now dwindled down to $5.76 billion. Of course, that infusion from VW comes at a critical time, and that will really help the company because it's running low on cash now, and the lower quarterly production and delivery and the supply chain constraints will only make matters worse. So, unfortunate news here for Rivian and Rivian stock investors. But I've been warning Rivian stock investors for several years now that this is not an industry you want to be invested in. The risks, the capital investment, the consumer demand are just imbalanced here against long-term investors. However, there is hope down the line. If Rivian can bring its lower cost model to the market and that lower cost model drives demand, there is hope for this company still. However, that hope is a long way away. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.